That's a powerful statement, isn't it? It perfectly sets the stage for one of the most high-stakes dramas playing out in the entire business world. A story that, when you really boil it down, isn't just about technology. It's about pure, unadulterated survival. What we're witnessing is what you might call Google's WeChat moment. It's an audacious, almost unbelievable strategy. In the world of chess, they have a name for it, a gambit. That's when you deliberately sacrifice one of your most powerful pieces, in this case, the king of search itself, all in a bid to win the entire game. So our story is going to unfold in 5 acts. We'll start with the central paradox that Google is grappling with, the cannibal's dilemma. Then we'll actually look to the past for a powerful lesson in a tale of two titans. After that, we'll count the cost of genius and explore the revolutionary new business model that takes us from clicks to actions. And we'll end with a solemn but absolutely necessary mandate to slay your own king. Right. So at the very heart of this entire story, there's this deep, kind of unsettling fear that has gripped investors, technologists, pretty much everyone watching this space. And this is the cannibal's dilemma. You see, for years, the biggest fear on Wall Street was that Google's shiny new AI, Gemini, would end up devouring its golden goose, Google's search. But here's the crazy part. The truth is, it has to. And as we're going to see, this incredible act of self-destruction, well, it isn't a sign of weakness at all. It's a sign of profound strength. To really wrap our heads around Google's future, we have to look to the past, because this exact same drama, it's played out before, just in another part of the world with another absolute titan of technology. Over in China, a company called Tencent faced the exact same crisis. Their main product, QQ, was a literal money printing machine, the undisputed king of messaging. And then, an internal project, something called WeChat, came along and threatened to make QQ totally obsolete. Now, this transition, it was absolutely brutal. For a while, the market hammered Tencent. Investors were terrified. I mean, why would you build something that's stealing users from your most profitable product, especially when it has no clear way to make money? It looked like pure self-sabotage. But Tencent knew. They knew that if they didn't kill QQ with WeChat, one of their competitors would kill them both. And this story, it's a perfect mirror for what Google just went through. For months, all you heard was how Gemini's enormous computing costs were going to permanently crush Google's famously high profit margins. The market was scared. But just like with Tencent, that whole narrative is now shifting. It's moving from fear of the cost to real excitement for the new growth it could unlock. Okay, but let's be real. This gambit is enormously expensive and it's incredibly risky. So what on earth gives Google the confidence that it can actually win a war that it started against itself? Well, the answer isn't necessarily about having better technology. It's something much more fundamental. It's distribution. Google has this unparalleled, you might even say unfair, ability to place its AI in front of nearly every single human on the planet who is online. It starts with the browser. Think about this. With a 65% global market share, Chrome isn't just a front door to the internet. For most of us, it is the front door. Google doesn't have to ask for permission to integrate its AI. They own the door. And then, of course, there's mobile. 3 billion. That's how many devices are running on Android. So Google can just bake its AI right into the very fabric of the phone. You don't need to go download a new app. The AI is already right there in your hand. And finally, you have the fuel for the fire. These AI models, they need data to learn. And YouTube, well, it's the world's largest gold mine of what's called multimodal data. Video, audio, text, all of it. This gives Google a perpetual, almost endless advantage in training its models on how the real world actually looks and sounds. But, and this is a big but, this aggressive strategy is a massive double-edged sword. By forcing things like AI overviews onto billions of users, Google's basically betting the entire farm. If the product is unreliable, if it gives wrong answers, or if it's just plain unhelpful, it could backfire, massively. It could erode decades of user trust, the very thing their entire empire is built on. You know, this decision also forces a really painful economic transition. Search was, well, it was a near-perfect business model. The cost of one more search was practically zero. AI is the exact opposite. Every single query costs real money in computing power. So Google is willingly trading its beautiful, high-margin business for one that's way more complex and expensive. And the big question is, why? It's because the endgame here isn't just to replace search. No, it's to build something exponentially more valuable. This is the dawn of the AI agent.
Let's go back to our 10-cent analogy for a second. WeChat ultimately became far, far more valuable than QQ ever was. And it wasn't by selling digital stickers, it was by building a whole ecosystem of payments and services. It became an agent for your life. And that is Gemini's destiny.
And right here, this is the revolution. See, in the old model, you search for plumber near me. Google gives you a list of links and maybe earns a small fee if you click one. But in the new model, you just tell your AI agent, handle my leaky pipe. And the agent finds a plumber, checks their reviews, schedules a time, and even pays them for you. Google's role completely shifts from an information directory to a service fulfillment engine. And instead of earning, say, 50 cents on a click, it can now earn a commission on a $500 job. The potential for capturing value here is just immense.
But there's a second, more subtle way they're creating value. It's a financial concept called re-rating. And what that means basically is it's when investors decide your business is fundamentally less risky, and because of that, it's worth more money.
And Google's doing this with subscriptions like its Google One AI premium plan. See, by charging heavy users a monthly fee, say around $20, it's converting those volatile advertising dollars into predictable, stable subscription revenue. Wall Street absolutely loves predictable revenue, and it rewards companies that have it with a higher valuation. It's a quiet but incredibly powerful transformation of their entire financial structure.
Which brings us to our conclusion. And here, we're going to zoom out from just corporate strategy to a fundamental law of innovation itself.
What looks like total chaos from the outside, this painful, risky, expensive act of self-cannibalization, is actually the clearest sign of corporate health you can find. It shows a willingness to sacrifice the comfortable present in order to secure the future. It really is the ultimate sign of vitality.
Of course, the gambit could still fail. The biggest risk is probably a failure of nerve, what you might call the Kodak mistake. You know, if Google gets scared and decides to slow down AI innovation just to protect search profits for a few more years, they will lose. And the second big risk is external. Regulators, especially in Europe, could still try to break up the very distribution advantage that makes this whole strategy even possible. And so, this whole multi-trillion-dollar corporate drama leaves us with a much more personal question. Every business, every career has its own cash cow, that reliable source of value that we depend on today. The real question is, do you have the courage to build the very thing that will one day make it obsolete?